Hello guys, welcome to the next unit. In this unit, we'll put all the concepts together and see a complete example for the trading plan. Okay, so let's just begin. As you can see, here's the whole trading plan I use. The first point of the plan is that I check if there's any upcoming news for that day, any upcoming high impact news to be more precise. It means that before you do your markups or do anything related to trading, you have to open forexfactory.com and check the upcoming high impact news. So I will just open forexfactory.com, as you can see, and on the front page, you'll be able to see the upcoming news, which are these. Let's say it's the 4th of January and you are trading on this day. The first thing you have to do is checking the upcoming high impact news. On this day, there will be 3 high impact news marked with red folders. As you can see, these are the red folder news, are the high impact ones. And we have a golden rule for high impacts. The rule is that we don't trade during these red folder news. Just don't open any position in that time window. Monitor the market, but just don't open a position. That's the golden rule here. If there aren't any upcoming high impact news, you can safely trade as usual. So you did the first point, you check the high impact news. Let's see the second point. The second point is the 4-hour supply and demand markup and determining the overall market direction. Knowing the higher time frame direction is necessary if you want to be successful in trading, especially in this 1 minute lower time frame strategy. Okay, so let's see an example, a whole example for this second point. Okay, so let's see the live example for the supply and demand markup and determining the overall time frame direction on the 4-hour chart. So as you can see, we are currently on the 4-hour chart, and if you take a closer look, you will see that price is moving in an extremely bearish trend, creating series of lower lows, lower highs. And if I just focus on this region, you will see that price is respecting supply zones over and over again, breaking structures to the downside. As you can see, we have this supply zone right here, broke structure to the downside here, supply zone respection here, another break of structure to the downside, another supply zone respection. So we are moving in an extremely bearish trend. We can identify this by looking at the chart simply. Okay, but let's focus on this region. Because as you can see in this region, price is moving in aggressively bearish. So it's creating breakout structures to the downside again, sweeping liquidities, breakout structures here, respecting supply zones or mid-zone areas, breakout structure to the downside, respecting supply zone, breakout structure to the downside, small pullback, breakout structure to the downside, small pullback, respecting supply zones. And actually, let's focus on this region now. So as you can see, we had this supply zone right here that price just respected after the breakout structure. So here was the breakout structure, and the breakout structure happened from this supply zone. Let's see if it swept any liquidity. Let me just put my marker right here, and let's see if it swept liquidity. As you can see, it actually swept small liquidity from this region. When price was moving in an uptrend, it actually swept this trendline liquidity, and we had this double bottoms on the 4-hour chart, as you can see. So it swept liquidity, created inefficient push to the downside, because here's the inefficient push to the downside, here's the break of structure, here's the liquidity sweep, and the liquidity sweep from that demand area. Okay, so price just did a break of structure, and actually it could have reversed on some sort of demand zone right here. Okay, we have to find that demand zone. I will just put my marker right here, and let's see if there's any demand zone in the back region. Actually, there is, as you can see, here's this perfect wick that perfectly reversed the price to the upside. Because as you can see, this wick created an efficient push to the upside here, also broke some structure. So this isn't the most valuable demand zone because it doesn't have all the 3 criteria, but it is still a demand zone because it could have reversed the price. Okay, so I just extend this zone. So I just extend this zone and remove this line from here. Okay, so as you can see, price tapped into this zone here and reversed to the upside to tap the supply zone and continue the overall bearish order flow. So in this region, after this demand tap, you had a room, you could have room to trade long trades between this demand zone and between this supply zone, but those are counter trend trades. Our main trend here is bearish. It's creating a series of lower lows, lower highs. So the overall main trend is bearish. These downside movements are the main trend movements, and the small pullbacks are the counter trend movements. So you actually had room between this demand zone and this supply zone to trade long trades up to this supply zone, right? But the main direction is bearish, so we want to see short opportunities. Okay, so let's say you open the trade here because there was a 15-minute change of character inside of this 4-hour supply zone, and after the 15-minute change of character, there was a 1-minute change of character inside of the 15-minute supply zone. So you entered here, it pushed the price to the downside, created inversion movement here, broke structure here. So it means price created another supply zone. As you can see, it created huge inefficient push to downside, break of structure, actually swept liquidity from this region, created liquidity here. Here's a liquidity trend line. Also liquidity, liquidity, liquidity. So there are loads of liquidity sitting in this region, waiting for the supply to be tapped. As you can see, this could be our correct supply zone because this supply zone caused the inefficient push to the downside. So I will just mark it out as our 4-hour supply zone. Okay. So actually price broke through this demand zone, as you can see. So demand broke. That means an opposite size zone has been created, which is this supply zone up here that has all the 3 criteria. Let's see if price stepped into another demand zone right here. I will just put my marker again here and see if there's any demand zone that price has stepped. As you can see, we have this weak zone again. This one, I will just change the color to blue. So we have this weak zone right here. That this isn't the most valuable demand zone again, so it more likely will be broken and price will break through this demand zone after the reaction. Sorry, so price will break through this demand zone after the reaction. As you can see, just did a small change of character or break of structure to the upside with not much of an inefficient push, small liquidity sweep. So yeah, this range, this region is just a range, and range and demands in ranges aren't the most valuable demand zones. Okay, so I just extend this zone here again. As you can see, price was perfectly reversed on this zone. So once again, price created this supply zone, inefficient push, break of structure, liquidity creation everywhere. So this is just a whole big liquidity pool needs to be filled. After the demand break, this demand break and the inefficient push, price stepped into another demand zone, and the demand zone reversed the price again to the upside. So you had room between this demand zone and this supply zone to trade long opportunities again, but those are counter trend movements. Just notice this, every long trade in this trend is counter trend movement. The main trend movements will be short trades. Main trend movements are more impulsive, has more volumes, and safer to use. So as you can see, price stepped into this supply zone, the 4-hour supply zone that we just marked. Right now, we are waiting for a reversal inside of this 4-hour supply zone on a 15-minute chart or a 1-minute chart. And as you can see, there's one more important thing to be noticed. We have triple taps on the 4-hour chart. So as you can see, we have the first tap here. This is the first tap. We have the second tap here, and the third tap has been just formed. So we have a liquidity line on the 4-hour chart, which means price has a really high probability to sweep all of this liquidity before the reversal to the downside. Okay, so here's the liquidity. So the possible scenario here is that price maybe reverses on the supply zone, and after the reversal, it will sweep all of the liquidity from above this line, collect all of the stop losses, collect all of the orders. Just imagine how many millions and trillions and billions of dollars are sitting just above this line. This is a 4-hour chart. Literally trillions of dollars sitting just above this line. Price will sweep all of this liquidity in order to continue the whole bearish trend. So it has to collect the orders, has to collect the stop losses in order to open more positions, open more sell positions. And after the sell position collects and everything, price could reverse to the downside. Okay. So we actually marked out all of the 4-hour zones. Maybe we can mark out demand zones in this region. So as you can see, price was moving in a downtrend here. After this price change character, this was the last supply zone right here. And this demand zone right here changed character on the 4-hour chart. As you can see, it caused huge inefficient push to the upside, change of character here, here, here. So basically change character everywhere. So this will be a valid demand zone. After this supply has been tapped and the 15-minute change of character happened, we can target this demand zone right here, or maybe another decisional demand zone, because as you can see, we have a decisional demand zone right here, but price has a really great chance to sweep this demand zone, because if you take a closer look, this is just liquidity again. That's what I was talking about in the liquidity unit, because as you can see, we have triple bottoms here again, first bottom, second bottom, third bottom. So this is just a huge liquidity line lined up with the demand zone. So price has a great chance to sweep the liquidity from above this supply zone. After the reversal, sweep the liquidity from below this demand zone. So sweep all of the liquidity. And what could hold the price after the downside liquidity sweep? This demand zone could easily hold the price, right? So this could be your first target after the enter on this region. So once again, liquidity sweep. After the liquidity sweep, reversal on the 15-minute chart and on the 1-minute chart. And after the reversal, you can enter in a trade, in a short trade, and target this demand zone. Okay, so I believe we marked all of the zones out inside of this region. These zones are irrelevant because they have been already mitigated by the following price action, as you can see. So this supply zone is mitigated by this is mitigated by this is mitigated by this. So the only unmitigated areas left are these zones. Okay, let's see the third point. Okay, so let's see the third point. I will just paste the print list here. As you can see, the third point is finding the 15-minute supply and demand zones and marking them up. Okay, this is a really simple task. Let's see the structure first. As you can see, this was the 4-hour supply zone that we just marked on the 4-hour. This caused the breakout structure on the downside in the 4-hour chart. Here's the 4-hour liquidity line, the first tab, second tab, third tab. This was the first extreme demand zone that changed character on the 4-hour chart here. This is the 4-hour decisional demand zone with liquidity just below the zone. So yeah, let's see the price action. As you can see in this region, everything is mitigated. So all of the supply zones inside of this region are mitigated by the following price action, as you can see. So all of the zones in this region are efficient and mitigated. So we will have to focus on this zone. Okay, price is actually in the 4-hour supply zone right now, as you can see. And if I zoom in, you will see that price created the fourth tab here. So we have 4 tabs, 4 equal tabs. So imagine how much liquidity are sitting just above this line. Price have to sweep that liquidity. Okay, but mark out the zones. Focus on the most relevant zones. As you can see, price was creating a series of higher lows, higher highs and higher lows in this region, starting from this extreme demand zone. And actually price changed character here on the 50-minute. This is a 50-minute change of character. I will just mark it here as a change of character down. So price change character on the 15-minute chart with inefficient push, as you can see. Actually, the first change of character happened here because this was the last upside candle and the last reverse before the last high has been reached. And this supply zone changed that character. I will just mark that supply zone here. So I will just zoom in. So this supply zone changed the character first. This decisional zone broke structure here and changed the bigger character. So we have 2 supply zones right here, as you can see. I will just mark the decision out too. So yeah, after this, price started to do a bearish trend here on the 15-minute chart, but price stepped into this demand zone right here, tapped into this demand zone and changed character to the upside after the tap of this demand zone. As you can see, this demand zone is really valuable because it's flat liquidity here, created inefficient push to the upside and had the liquidity just above it, and multiple liquidity lines everywhere. So this is a really valuable demand zone. Price tapped this zone, and after the tap, it reversed to the upside. Okay, so in this region, price is moving in an uptrend, so it's bullish. But knowing the fact that the overall time frame direction, so the overall 4-hour direction is bearish, we know that taking long trades in this region are counter trend movements, right? So everything that has been taken on the long side is a counter trend movement. But you can still take it but you just have to know the fact that you are trading a counter trend movement, and it has less chance to hit TP than the main trend movements. Okay, so we marked out this demand zone. As you can see, it reversed the price here, change character to the upside again here. So here's a change of character up. And actually, this demand zone right here caused the inefficient push and change of character to the upside. And as you can see, price reacted on this demand zone here, just wick below. So this isn't a real break because, as I told you, the wicks below are just liquidity sweeps. So it could have been a liquidity sweep from this region, could have been a liquidity sweep from this region. So these are just liquidity sweeps. Okay, price actually reversed on this demand zone, as you can see. I believe there was a 1 minute change of character inside of this zone. And after the 1 minute change of character and the entry opportunity, price started to form series of higher highs and higher lows. Okay, let's focus on the supply zones. As you can see, this supply week is a flip zone. Also, this supply week is a flip zone too, but this is less valuable because it didn't have that much reaction than the extreme one. So, okay, I will just delete this one and focus on the extreme one. So, as I told you, this supply zone changed character to the downside first here. And as you can see, after the demand change of character, price started to form series of higher highs and higher lows and tapped into this supply zone. Okay, let's focus on that region. As you can see, price tapped into this zone, did a reaction, rejected on that zone, and after the rejection, it just blew to the upside and created this demand zone. So this will be our 15-minute flip zone. One more noticeable thing, that 15-minute flip zones are really, really strong. You have to focus on the 15-minute flip zones every time. Just mark them out and remember the zones that are flip zones. Okay, so this is the 15-minute flip zone. This is the 15-minute demand flip zone that caused the top of the 4-hour supply zone. As you can see, this was the top of the 4-hour supply zone, and it happened with a huge inefficient push to the upside. And it actually swept liquidity from this region, and also it swept liquidity from this region also. So yeah, we have this demand zone right here. And below this demand zone, we can find several demand zones. For example, this one, but this isn't as valuable as this one because this is the flip zone. This is the major demand zone. These demand zones just broke structure to the upside with inefficient push. Of course, they are valuable. They also swept some liquidity from this region. They are valuable, but not as valuable as this one. Okay, let's mark out all of the demand zones. As you can see, we have this one here also. And maybe this one too. So we have 4 demand zones, 4 15-minute demand zones. Okay, but we will focus on this one. This could be our later target point for the shorts. As you can see, price didn't really change character here. I could call it a pullback instead of a change of character. But as you can see, price created a new high, body break here. And after the body break and the wick above, it created a false change of character to the downside. And after the false change of character, it's coming back up to collect more orders on this zone, because just imagine how many sellers are opening positions on this week, because they thought that this is a change of character on this 15-minute chart, but they didn't notice the 4-hour liquidity line from above this supply zone, right? So market is just collecting more liquidity to be swept. So we are collecting more liquidity, and we are expecting the sweep of this liquidity because more sellers entered on this line, more sellers entered the market on this supply zone. So yeah, the next thing we have to do is wait for the liquidity sweep. But we will do that on the 1-minute chart. So we marked out all of our 15-minute zones. Maybe we can mark this zone out also, but this will be inducement for the downer areas, for these areas. Okay, let's see the next step. Okay, so let's see the next point. As you can see, the 4th point is refine all the 15-minute supply and demand zones on the 5-minute chart. So this will be easy. We already talked about refinements. So let's just begin. As you can see, currently we are on the 5-minute chart, and these were the unmitigated demand zones that we just marked previously. So we will have to refine these zones. Okay, let's begin on the first one. The first one is the flip zone, as you may know, because this 15-minute demand zone flipped the 15-minute extreme supply zone. So this was the 15-minute extreme supply zone that changed character on several places here. So this will be our most valuable 15-minute demand zone, and this will be our later target point. Okay, so let's just refine it. If I zoom in, you will see that we have a clear refinement inside of this 15-minute zone, this bigger zone. We have a smaller 5-minute candle, this one, and the inefficient push and the breakout structure and liquidity sweep started from this candle. So this will be our perfect refinement. As you can see, we can refine this candle for this downside candle, and I will just type the 15-minute flip zone 5-minute refine. Okay, let's see the next zone. The zone below this one is this zone. As you can see, inside of this 15-minute zone, we also have a clear 5-minute demand zone, this downside candle, because the inefficient push and the breakout structure and the liquidity sweep start from this candle. So as you can see, huge inefficient push to the upside. Here's the breakout structure. Again, here's the liquidity sweep because there's double taps. So we have a clear refinement again. We can just use this candle as our 5-minute refinement. I would just type 5-minute refine again here. And that's it. Let's see the next zone. So this will be our next zone. And as you can see, inside of this 15-minute POI, 15-minute demand zone, we have inefficiency again because inefficient push started from this candle, from this upside candle. As you can see, here's inefficiency because the wicks between the candles doesn't meet in the middle. So we can use this candle as our 5-minute refinement. It also broke structure. This was the candle that started the whole order flow that broke structure here. And yeah, it actually swept some liquidity from this region, but it is not as valuable as the 15-minute flip zone here. So this one, but we can still refine it. Okay, let's see the next one. As you can see, I will just zoom out first. So these are the refines that we just did recently. I will just type 5-minute refine again here. And as you can see, this is the last 15-minute zone that we have to refine. And inside of this zone, we will have a clear zone again. So the inefficient push started from maybe this small candle. As you can see, the wicks doesn't meet in the middle. So the inefficient push started from this candle, and the breakout structure and the liquidity sweep also started from this candle because here's the double tap, here's the breakout structure. But if you don't want to use this small candle, you can just simply use the bigger candle like this, because the taps are almost equal and the inefficient push started from these taps. So if you don't want to use this small zone, so this small zone, you can just simply use the bigger one. Okay, so the next one, this big zone, is the 4-hour zone. And actually, if you want to refine this 4-hour zone, you can refine it on the 15-minute chart. I usually just leave my 4-hour zones the way they are. So I don't really refine them. But if I take a closer look, you will see that inside of this 4-hour zone, we will have, for example, this 15-minute zone for a refinement because the inefficient push started from this candle, and also it changed character here. So yeah, I will just keep it like this. I won't refine it, but if you would like to refine the 4-hour zones on the 15-minute charts, you can of course do that. So yeah, let's switch back to the 5-minute chart. So these are our refinements. These are all the 5-minute refinements. And the next step, actually you can mark more 5-minute zones out on the 5-minute chart that weren't appear on the 15-minute chart. So if I like to, I can mark 5-minute zones out. For example, here's a clear zone. As you can see, this zone is clear because it started an inefficient push here and swept these double taps and broke structure here. So actually I can just mark this 5-minute zone out if I'd like to. And it also has liquidity just above it. So here are liquidity. As you can see, this upside candle created a small pullback here and created the first bottom, and this pullback created the second bottom. So this zone has liquidity. But if price reverses, I believe after the liquidity sweep, so price reverses, it will hit the 15-minute flip zone, because this flip zone has so much power. It flipped the 15-minute supply zone. So I believe if we enter in shorts, we will target this 15-minute, this 15-minute flip zone. So yeah, actually you can mark out more 5-minute zones if you'd like to, but in this case, I find it unnecessary. So let's just skip this part and jump to the next point. Okay, so let's see the next step. As you can see, it switched to the 1 minute chart and mark up any potential 1 minute zones that could lead to the 5 minute zones. Okay, so basically we are waiting for, sorry, I just replay the price. Okay, so basically we are waiting for the liquidity sweep from above this region. So as you may know, there are 4 equal taps on the 4-hour chart, on the 15-minute chart, on any chart. So there's huge liquidity on this line. So basically we are waiting for the sweep of this liquidity on the 1 minute chart. And after the 1 minute chart sweep, we will wait for a 1 minute change of character to the downside. And after the change of character to the downside, which will happen somewhere around here, after the change of character to the downside, we will have a supply zone that change character. And after a supply zone that change character, we will look for a short opportunity on that supply zone, and we will target the next unmitigated demand zone, which will be this one in this case, because this is a really, really strong 15-minute flip zone that I just talked about. So once again, 1 minute change of character and liquidity sweep happens after a supply zone will be formed, enter on that supply zone and target the next unmitigated zone. Okay, but actually, why are we waiting for short opportunities? Let me just talk through this again, switch to the 4-hour chart. And as you can see on the 4-hour chart, the trend is extremely bearish, right? So as you can see, the movements on the 4-hour chart are bearish movements. The main movements are bearish movements. All of the downside movements are huge, inefficient, high volume movements, breaking structures and sweeping liquidities, inefficient movements. And all of the upside movements are just small pullbacks with no inefficiency, no volume. So as you can see, all of the downside movements are huge, inefficient movements. All of the upside movements are small pullbacks, downside movement, huge, inefficient movements. And this is our pattern right here. We are looking for short opportunities. And on the 15-minute chart and the 4-hour chart, we have a huge liquidity line just above the 4-hour supply zone. And this will be the perfect opportunity for the short entries. Price will sweep this liquidity, and after the sweep, it will create a change of character and happen a trade. This is our perfect pattern here. Okay, so let's just switch to the 1 minute chart and actually play price forward. We are waiting for the 1 minute sweep, waiting for the sweep on the 1 minute chart. On the 15-minute chart, it will look like just one big candle that sweeps the liquidity with the wick, and after it will reverse, but we can catch a good anti-opportunity on the 1 minute chart. So this is the liquidity line right here. Let's wait for the sweep. Okay, small pullback. And actually the sweep happened, as you can see. And this was the last demand zone that created the sweep and the breakout structure to the upside. Let's play price forward. Price swept this liquidity line, as you can see. That's what happens next. And as you can see, price broke through the last demand zone that created the liquidity sweep and the breakout structure to the upside on a 1 minute. And price swept all of the liquidity from above this line, swept the trillions and trillions and trillions of dollars from above this line, from above the supply zone. And after the liquidity sweep, it reversed immediately, as you can see, with huge inefficient move to the downside and broke through the last demand zone. And actually it broke through several demand zones because we have this demand zone right here. So yeah, this means a demand zone has been broken. This means we have a supply zone. Sorry, the recording stopped suddenly. I don't know why, so let's just continue. So as you can see, this demand has been broken. So it means a supply zone will be automatically formed, because if a zone breaks, an opposite sign zone will be formed. Okay, so here's a change of character. As you can see, price change character here because it broke through the last structural low point. And this was a strong low point, as you can see, because it created the last high point and swept liquidity from this region. So price just broke through this demand zone. Okay. Let's find the supply zone that caused the break of this demand zone. As you can see, here's an inefficient push that came into the market. Here's the liquidity sweep from this region. Here's the change of character. So which supply zone caused this change of character, inefficient push, and liquidity sweep? This upside candle has been already mitigated by the following candle, right? But the following candle is already inefficient. So this is all inefficient. So in this case, as I told you, we have to use the wick as our right zone, because this candle is mitigated by the following candle. So the wick is the only unmitigated area. Okay, so I will just mark it out as our supply zone. And I will set my order limit on this zone, a sell limit. And I will set a 2 pip point stop loss. So as you can see, the 2 pip exactly covers the zone. So we can use the 2 pip stop loss. And if we would have used the full body, which is not correct in this case, the 2 pip would not be enough, as you can see. It's already almost 5 pips. So the only right zone here is the weak zone. Okay, I did set an order limit on this zone, and I will target the next unmitigated 15-minute zone, which is our flip zone. Okay, this is a really, really strong flip zone. We just extend the position a little bit, and let's play price forward. Okay, so as you can see, the pullback happened. Price created liquidity for this zone. So that's perfect. As you can see, here's the first tap, here's the second tap. So we have liquidity just below this zone. So we have perfect liquidity, perfect zone, perfect inefficient push, change of character, break of the demand zone, liquidation of the 4-hour liquidity from above this line. So this is a really, really perfect textbook setup, right? Price flat, higher time frame liquidity, created inefficient push to the downside that changed character, broke through the last demand zone, created liquidity just below the freshly formed supply zone. So yeah, I did set an order limit. Let's see what happens next. Price is coming up to mitigate the zone, almost mitigated the zone, and reversed immediately. Okay, let's play price forward. And price has been left without us. As you can see, price didn't actually tap our entry point and left without us, but that's perfectly fine. Let me tell you why. I wanted to show you that you'll miss loads of trades and opportunities. You have to get used to this. I also wanted to show you that forex trading isn't always fun and easy. You'll miss huge opportunities like this, and you'll get stopped out a lot of times, but it's all good. All you have to do is follow the trading plan. If you follow your trading plan, no matter what, you'll find consistency on the long run. That's the #1 most important rule. Follow the plan no matter what. Get used to losses, get used to misses, and leave your emotions out of this game. In this example, we followed the plan. Price gave us an incredible opportunity, but didn't mitigate the POI. It is what it is. At least you'll know that your analysis was on point, right? You have to adapt and focus on your next trade. So that's perfectly fine if you miss a trade like this. Don't stress out. Don't think about it too much. Just adapt, close your position, and monitor price. You can mark out new zones. You can find new opportunities, and that's perfectly fine. Okay, let's do another example, but now with a tag. So hello, welcome to the next video. Let's do the next example for the whole trading plan. Okay, so as you can see, the structure is the same, just like in the previous example. Price is moving in an extremely bearish trend, creating inefficient movements to the downside, breaking structures to the downside over and over again, respecting supply zones over and over again, breaking through demand zones over and over again. So the structure is still extremely bearish, as you can see. We have these 2 4-hour demand zones marked out again, just like in the previous example. So I won't show you that again. So okay, let's map out our structure. As you can see, price is moving in a downtrend, creating a series of lower lows, lower highs, and price is respecting its supply zones over and over again. We had this last supply zone right here. Price reacted on this supply zone after the inefficient push to the downside and the demand tap. So price actually tapped this demand, reversed on this demand zone, and after the tap of this supply zone, it reversed again to the downside and did a break of structure with this movement, with this wick. Because as you may know, break of structure won't be a break of structure if it breaks with a wick. So this wick wasn't a break of structure, it wasn't a demand break, it could have been just a liquidity sweep or anything. So as you can see on the 4-hour chart, price tapped this demand zone first, rejected on it, tapped the supply zone, tapped the demand zone for the second time, rejected on that demand zone again. And after the rejection, this demand zone has been broken, as you can see, with an inefficient push. Let's see which 4-hour supply zone caused the break of this 4-hour demand zone. Because if a zone breaks, an opposite side zone will be automatically formed, as you may know. So as you can see, the inefficient push came into the market from this upside candle, and this upside candle has been not mitigated yet. So this is our right supply zone in this case, because inefficient push came into the market from this candle, break of structure here, liquidity sweep from this region and also from this region. And it actually didn't tap into the next 4-hour demand zone. So we will have this right supply zone I will just mark out this as a 4-hour supply zone, as you can see. And price actually tapped this zone and had a small rejection on it. Right now, we have to switch to the 15-minute chart and mark out all of the 15-minute zones. Okay, so as you can see, price rejected on this 4-hour supply zone here. And if you take a closer look inside of this 4-hour supply zone, there will be a really clear 15-minute supply zone, this one. And price actually tapped this zone also, not just the 4-hour one. As you can see, price exactly tapped this one and reversed on this zone. So this is a really strong confirmation for the shorts. So price tapped the 4-hour flip zone because this 4-hour supply zone flipped the 4-hour demand zone. So this will be a really strong zone. If price rejects on this zone, we will know that we will look for a short opportunity and short confirmations. And inside of this 4-hour zone, price tapped the 15-minute supply zone. I will just mark it with this line. Okay. So as you can see, price just tapped this zone, and after the tap of this zone, it immediately reversed and had a really strong reversal and innovation push to the downside. Okay, so right now we are on the 15-minute chart. We have to find all of the supply and demand zones on the 15-minute chart. Okay, so let's begin. As you can see, these areas, these zones are mitigated by the following price action. So this upside price action. So we will have to find for demand zones. Okay, as you can see, here's a demand zone that created huge inefficient push to the upside and changed character. I will just mark it as a demand zone and change the color to blue. So as you can see, here was a downtrend, inefficient push to the downside, downtrend, break of structure here, less break of structure, and this demand zone flipped this supply zone. As you can see, we have this supply zone that created the less low and created the less break of structure to the downside, and this demand zone reacted on this supply zone and flipped it with a huge inefficient push to the upside, and liquidity sweep from this region, liquidity sweep from this region, change of character here, change of character here. So this is a really strong demand zone, as you can see, and price reacted on this demand zone immediately. And after the reaction, it pushed to the upside and tapped the 4-hour and the 15-minute supply zone that flipped the 4-hour demand zone. Okay, so after this demand zone, we will have another demand zone, which caused the inefficient push to the upside. And this will be the demand zone. As you can see, this is a really huge zone. So we will have to refine it on the 5-minute chart. And actually, we have another hidden demand zone. If I just zoom in, you will see that here's an inside bar. As you can see, inefficient push came into the market from these two candles. And this candle closed lower than the last high of the previous candle. So this means this is an inside bar. And we have a rule for this. Every inside bar is a supply or demand zone. So I will just mark this demand zone out. This will be our less demand zone. And price actually changed character here and broke to the last demand zone. So we will have a right supply zone. Actually, I can just mark out this zone as our supply zone. But I will just rather use the 5-minute refinement instead, because this is also a really huge zone. And this zone is also inside of the demand zone. So the next step is to refine all of these zones on the 5-minute chart. Okay, so let's refine all of the 15-minute zones on the 5-minute chart. And as you can see, price actually tapped this 15-minute zone already. So there's no point to refine that zone, because a huge recovery and huge reversal already happened on the 15-minute zone. So there will be no point to refine that 15-minute zone on the 5-minute chart, because as I said, reversal has been already happened. So, okay, let's start the refinements on the 5-minute chart. So this zone has been already mitigated, and this is the refinement of that zone, because the inefficient push came into the market from this candle, as you can see, and this was the last 15-minute supply zone that created the last 15-minute low here and the last break of structure. And this candle, as you can see, flipped that 15-minute supply zone. So this is a really strong zone. Okay, price mitigated this zone. And let's refine the next zone after this demand zone. And this is the next 15-minute demand zone after this zone. And the refinement will be really clear. As you can see, we have a crystal clear zone inside of this 15-minute zone, which is this one, because huge inefficient push came into the market from this candle. As you can see, inefficiency here, and it broke structure to the upside. It swapped liquidity from this region, first, second, third tap. So it swapped liquidity, broke structure here to the upside. So did everything. This is a really clear zone again. This could be your later target point for the shorts. So if price comes back up to the supply zone, mitigates the supply zone, and creates a 1 minute change of character also, we will hop in a short trade and we will target this demand zone. There will be a huge room to enter in the trade because the movement between this supply zone and this demand zone will be around 10 to 15 risk reward ratio, which is huge, which is really, really great. We do not trade for ego, right? We trade for profit, we trade for money. And 10%, 15% on a single trade in minutes is extremely good, right? We can all agree in this one. Okay, so let's just continue. We refine this 5 minute zone. And as you can see, here's the inside bar. Here's the 15 minute inside bar. And actually price changed character on this zone because as you can see, price actually broke this last high point. This was the last high point, and the breakout structure came into the market from this week or this candle because price broke the structure to the upside with inefficient push. Here's an inefficiency, as you can see, and it body broke above and tapped this last supply zone, the refined 4-hour supply zone. And after a tap of this 15 minutes supply zone, price reversed and changed character immediately and broke through supply zone. I mean the demand zone, as you can see. So if a demand zone breaks, a supply zone will be automatically formed, as you may know. So I marked out on the 15 minute this supply zone as our character changing supply zone, but we can refine this on the 5 minute also. So this is our refinement. As you can see, it's crystal clear again because inefficient push came into the market here, change of character came into the market here, liquidity sweep came into the market here, swept liquidity, broke demand, broke structure, changed character, created inefficiency. So all of these movements are started from this supply zone, this 5 minute supply zone refinement, right? Okay, so here's the plan. We are waiting for the tap of this supply zone on the 1 minute chart. And after price tap this 5 minute supply zone, we will wait for a 1 minute change of character. So the 1 minute structure will look like this. Price tap this supply zone, creates a change of character, and then the freshly created 1 minute supply zone, we will enter in the trade and we will target this 15 minute demand zone. This is the master plan here. It's really clear and simple, right? Let me just walk through this again. So we had a 4-hour supply, 4-hour demand zone. Price broke through this 4-hour demand zone with a 4-hour supply zone. Inside of that 4-hour supply zone, we had a 15 minute supply zone that created huge inefficient push to the downside and break of structure and demand break. After this, price created an upside movement, levitated back up to this 15 minute and 4-hour supply zone. Price tapped both of the zones, swept liquidity from this region, changed character after the supply zone tap, the 15 minute supply zone tap, it changed character on the 15 minute and the 5 minute structure. After it created inefficient push to the downside, swept liquidity, created a fresh supply zone, and we can wait for a supply to be tapped and enter on a 1 minute chart with our 1 minute entry models. Either if it's a flip, either if it's a change of character, either if it's a continuation, we will enter in a trade. That's our master plan here. But one more noticeable thing, we can also miss this trade, just like the previous one. There's a chance that we'll miss this trade. This is also a textbook example, but there's a chance we will miss it. Okay, so let's see the 1 minute structure. Okay, so let's see the 1 minute structure. As you can see, this was the last 5 minute demand zone that created a new high on the 5 minute chart. And also this was the 15 minute inside bar that we just refined on the 5 minute chart. Okay, this was the 15 minute supply zone and this is the 4-hour supply zone. As you can see, price actually tapped this 4-hour supply zone after a huge inefficient push. And this was the last demand zone that caused that push. So here's the last demand zone on the 1 minute chart that caused the less inefficient push that tapped us into the 4-hour supply zone. And instead of breaking below this demand zone and breaking below the strong low, because this is a strong low, it created a new high. So instead of breaking below the strong low and the demand zone, price created liquidity, as you can see. Here, liquidity on the downside, and here liquidity on the upside. So we have triple taps on the upside, triple bottoms on the downside. So this means this liquidity have to be swept on both sides, right? Okay, as you can see, price tapped the zone first, couldn't break above the last high point, couldn't break above it. It tried once, second and third time, but it couldn't break above. And the final push came into the market from this candle. Sorry. So the final push came into the market from this candle. As you can see, this was the 1 minute zone that created the last high and breakout structure and liquidity sweep. Okay, but right now we are in the 4-hour supply zone, and in a 4-hour supply zone we have to wait for a 15-minute or 5-minute change of character, as I told you, right? So 5-minute change of character happened from this supply zone, and this supply zone flipped the 5-minute demand zone. So we are waiting for this supply to be tapped and not the 1-minute supply zone that flipped the 1-minute demand zone, because we are inside of a 4-hour zone, right? This is a really important part, because this supply zone, this 5-minute supply zone, changed character on the 5-minute and changed character on this 5-minute demand zone. Because we are inside of a 4-hour supply zone, we have to aim for this supply zone, and we have to search for a reaction on this supply zone and change of character on the 1-minute structure on this supply zone. And we are not aiming for 1-minute zones right now. So these zones are irrelevant right now. We are aiming for this one. Okay, so I will just play price forward and wait for a reaction on this zone. So let's just play price forward. One more thing, as you can see, price actually broke through this demand zone also. So this is a really, really strong confirmation that the trend might be changing from bullish to bearish, right? Because price broke through several demand zones, either on the 1-minute, either on the 5-minute, and broke through many demand zones, swept loads of liquidity from here, from here, from here. So yeah, the trend might be changing from bullish to bearish. And the overall higher time frame trend, so the 4-hour trend, is still extremely bearish. Remember, we are aiming for short opportunities because the overall structure, the overall trend on the 4-hour chart is extremely bearish. Okay, so let's just play price forward. As you can see, price is ranging now. Swap this upside liquidity with this movement on the way to tap the zone, and the zone tap actually happened, as you can see. Let's wait for, okay, a huge reaction came into the market, as you can see. And sorry, I will just replay price here. As you can see, this was the last demand zone that tapped us into the 5-minute supply zone. So this demand zone was the last zone that created inefficient push, break of structure, and liquidity sweep, and tapped us into a higher time frame 5-minute zone, right? Let's just take a closer look. As you can see, here's liquidity. First, second, third tap. So here's a liquidity line. Here's inefficient push. Here's break of structure. So this is a really valuable demand zone. Okay, as you can see, price reacts on this zone, right? Reacted on this zone. Give immediate reaction after the tap, after the mitigation. Right now, we will have a flip scenario because, as you can see, price flipped this demand zone. Price broke through this demand zone, and this was a valuable demand zone, valuable 1-minute demand zone, because, as I said, it created inefficient push, break of structure, and swept liquidity and tapped us into a higher time frame zone. So basically, it has 4 criteria. So this is a really valuable zone. Okay, as you can see, we have an extreme zone up here, extreme supply zone, but this extreme supply zone did literally nothing. It didn't change character, it didn't flip anything, so this is nothing. The right supply zone in this case will be this one, as you can see, because price created inefficient push from this candle, from this supply zone, and this candle was the one that caused the break of this demand zone and the flip. So this will be a 1-minute flip zone. We are aiming for this one. We are setting an order limit, a sell limit on this block. And as you can see, because this is a equilibrium entry point, because the wick is bigger than the whole body, than the 50% of the whole body, then we will use an equilibrium entry. I'm just setting a gap box up here, placing a sell limit on the 50% of this block. Sorry, the recording stopped again. I just realized that I just filmed the whole video and the end was missing. So let's just continue. Okay. So here's the last supply zone that created inefficient push to the downside. I broke through this demand zone, and I just did set an order limit on the 50% of this candle. So this is an equilibrium entry, right? Okay, I will use a 2 pip stop loss because, as I said, I normally use 1.5 or 2 pip stop loss, but 90% of the time I will use a 2 pip stop loss. So let's just keep it that way. I will aim for the next unmitigated 15-minute demand zone, which is this one down here. This is our last unmitigated 5-minute refined from the 15-minute demand zone. So this will be our target point. Okay, as you can see, the risk-reward ratio is almost 1:9. So this is a really, really good trade. As I said, we are trading for money. We are trading for percentage, and we are not trading for our ego, right? So 1:10, 1:9 is a really, really good and huge risk-reward ratio. We will gain almost 10% profit. Just imagine 10% profit in minutes. That's a really, really good risk-reward ratio. Okay, so let's just play price forward. As you can see, more inefficient push came into the market. A pullback started. Price created liquidity just for this zone and almost broke structure, but it didn't broke structure because this is just a weak break, not a body break. So as you can see, we have a liquidity here, a really, really good liquidity line just for this zone, right? So this is one more confirmation that this zone will be the right zone and not the extreme one, because this zone has liquidity just below it. This zone has no liquidity, or maybe we can call this a liquidity, but as I said, this zone did literally nothing. It didn't change character, it didn't break supply, it didn't break demand, sorry, and didn't flip anything. This is the flip zone, and this zone now has liquidity just below it. So this is a one more confirmation. It is all the three criteria again. It changed character, flipped the zone, created inefficiency, created liquidity, swept liquidity. So this is a really valuable, huge opportunity zone. We are still keeping the order limit. Let's play price forward. As you can see, price swept the liquidity and tagged us into the trade. Right now we are in the trade, as you can see, and play price forward. After the mitigation of this zone, price immediately turned down, created a reversal, as you can see, and our trade is running in profit right now. Really, really good profit. And this low has been broken. This is a weak low because it couldn't create a new high. So the couldn't break above this last high point. So this means this is a weak low. And if price breaks through a weak low, we will set our stop loss to break even, as I said. So our stop loss is right now in break even. I will just mark it with a red line. Let me just change the color, please. Okay, so our stop loss is in break even. Right now, we have no risk on this trade. If it hits our break-even point, there will be no profit and no loss. This is a really, really good trade. Okay, let's see what happens next. As you can see, price broke structure to the downside, but I won't set my stop loss here because this is a liquidity line. I will just keep my stop loss in break-even. Let's see what happens next. As you can see, price is building up more liquidity here, so I will just keep my stop loss in break-even. Price broke structure to the downside here. As you can see, here's a break of structure to the downside. BOS short, play price forward. I will still keep my stop loss in break even because of this liquidity. Price broke structure to the downside and broke the last week low, but it has liquidity and I don't want to become liquidity. I will just keep my stop loss in break even. That's the most safest way in this scenario. Okay, play price forward. As you can see, huge break of structure came into the market again. And price coming up to pick up all of this liquidity, as you can see. I will just keep my stop loss in break even again. Price is coming up to pick up the liquidity. It didn't pick up the liquidity. Let's see what happens next. Creating more liquidity. It didn't pick up yet. It broke structure, almost broke structure with an inefficient push. As you can see, this is not a break of structure because this was just a weak break. So weak breaks aren't break of structures. So I will just keep my stop loss in break even. Still, let's see what happens next. So break of structure happened now. I will just move my stop loss to this point, maybe just above the liquidity. So I will just lock in maybe 1.5% or 1%. So I will just keep my stop loss just above the liquidity. In case the liquidity sweep happens, the stop loss will keep me in. But this huge inefficient push here and here is just an extra confirmation that market won't come back up to pick up the liquidity, and it's just heading down to our target point. So yeah, the first scenario, you can use your stop loss just the way I use. above the liquidity. The second one is just used above this last high point that created a break of structure to the downside with this movement, with this inefficient movement. So both are good because this has a higher chance to keep you in a trade. This will lock you more profit in case the liquidity sweep or the reversal happens. So let's see what happens next. And our TP did hit. So as you can see, we just booked almost 10% in maybe 15 or 20 minutes. So this was just a 20-minute trade. Actually, from 33. Okay, not a 20-minute trade, 40-minute trade, but in 40 minutes, we booked 10%, almost 10%. This is huge. In 40 minutes, you completed a whole FTMO or my forex win challenge, right? This is a huge trade. So yeah, okay. This was the second scenario. This was the second example. Let's see another one. See you in the next one, guys. So hello, welcome to the next example. As you can see, I kept all the drawings from the previous example. So the structure is the same. The zones are the same. The supply demand zones are the same. So everything is the same. So the 4-hour structure is still extremely bearish. So every downside movement is a main trend movement. Every upside movement is a counter trend movement. Okay, as you can see, this was the last example. This was the last trade from the previous example. We just hopped out of a trade here in 10% profit. We are happy. We are looking for the next opportunity. We have to adapt. As you can see, price broke through this demand zone. This demand zone couldn't hold the price. So the short, the main trend intentions are still stronger than the long intentions. So as you can see, this demand couldn't hold the price. And instead of holding the price, price just broke through this demand zone. Sorry. If a zone breaks, an opposite side zone will be formed, as you may know, and we will have to find the zone that caused the break of this zone. As you can see, this was the supply zone that caused the inefficient push to the downside, swept liquidity from this region, and actually the price reacted on this supply zone, mitigated this supply zone already, reacted on it, and reversed the price to the downside again. So the zone that has been created, the last demand zone break, has been already mitigated. So we will have to find another zone. Maybe price will reverse from this point. Price has a great chance to reverse from this point to collect all of this liquidity, because as you can see, we have a huge liquidity trend line here. Here comes the liquidity trend line. Price just built up huge liquidity trend line in this region. As you can see, perfect liquidity trend line taps. First tap, second tap, third, fourth. So just imagine how many orders are resting just above this line. Loads of trillions and trillions of dollars are resting from above this line. So price has a really great chance to tap into some sort of demand here. Maybe this demand will hold the price. And after a demand tap, it can reverse to the upside, change character, and collect all of this liquidity from above this line and mitigate the full zone, mitigate the full percentage of this zone. Because as you can see, this was the first step. Price tapped this zone, and this was our trade idea actually. But this step didn't mitigate the full zone. As you can see, it was just a 1% mitigation. So just imagine how many orders are still resting on this zone. So those orders have to be picked up, right? So we have double confirmation, liquidity line, liquidity trend line, and the full body mitigation. So if price reverses from this area, we can hop in a long trade, and that will be a counter trend trade, as you may know, because every long trade is a counter trend trade. But we can actually do it because price has a really, really high chance to change character here, react on demand zone, and mitigate this supply zone. So, okay, let's see what happens. We have still the same zones. Everything is the same. Let's see what happens on a 1 minute time frame. So as you can see right now, we are on the 1 minute time frame, and we are waiting for this liquidity trend line to be swept. We are waiting for this full zone mitigation. So let's just play a price forward. As you can see, it mitigated down the areas. Let's switch back to the 5 minute chart and let's see what has been mitigated. Actually, we have this demand zone right here, and the part of the wick has been left unmitigated, but this isn't a really valuable demand zone, but it could reverse the price. Let's see what happens. Actually, as you can see, price reversed on that zone. Let's see what happens next. Price built up more liquidity, as you can see. So here's the I don't know which tap was this, maybe the 5th tap. So price tapped the trend line for the 5th time. More sellers entered here, more orders have been opened here. So price has to collect all of this liquidity from above this line. Just look at this. How many touches, how many orders are sitting just above this line? And how many orders are sitting still on this block? Okay, let's see what happens next. As you can see, price started to change character, started to collect liquidity. Okay, huge pushes to the upside. As you can see, price did a really good flip here, or maybe on this week, this demand zone flipped the whole structure from bearish to bullish. As you can see, it created change of characters on several places. So loads of change of characters here, and loads of orders has been already collected. Okay, we can mark this zone out. Actually, we have this clear demand zone because it changed character on several places, collected liquidity, change character, flip the supply zone. So yeah, actually this is a really valuable demand zone. We can set an order limit on this one, and we can use the 50% of the zone because this will be another equilibrium entry, as you can see, because the wicks are bigger than the 50% of the whole body. So I will just use the equilibrium entry again. 50% entry set. 2 pip stop loss again, because we always use, not always, but 90% of the time I use 2 pip stop loss. So it has been just set. I will just aim this zone because, as I said, there are still loads of orders sitting on this zone, and the liquidity trend line is just above this zone. So price has a really great chance to tap this zone. Okay, so our order limit has been set. Let's wait for price to tap this zone. As you can see, it's creating new highs, created another liquidity line here, as you can see. So more sellers entered the market here. And as you can see, actually we have double taps right here. So more liquidity needs to be collected. So this is one more confirmation for the longs, but just a reminder, long trades in this scenario are still counter trend trades. You have to know that you're trading a counter trend trade or a pro trend trade. This will be a counter trend trade. It has lower possibility to go in your favor, but it still can be good. Counter trend trades are still good. You just have to know the higher time frame intentions, and you will have to know that where can price react and set realistic targets for your counter trend trades. Okay, so as you can see, reversal has started. Price building up more liquidity, as you can see, built up liquidity on this line, and it's on the way down to sweep that liquidity, and all of this liquidity has been built up for this demand zone. Okay, so let's see what happens next. Let's just play price forward. Built up more liquidity here, as you can see. So loads of orders has been opened on this touch too, because this was a supply zone, or this was a double tap. I don't know how you call it. Just loads of orders has been placed on this touch also. So just imagine how many orders are still sitting here, how many orders are sitting still here. So yeah, I just play price forward. We are waiting for this demand to be tapped, and we have an order limit on that demand zone. Look at the slow movements. So these are slow movements. Let's play price forward, extend our zone. Okay, play price forward. As you can see, more liquidity has been built up just for this zone. As you can see, here's loads of liquidity again. Play price forward again. Liquidity has been swept. Zone almost tapped, as you can see. Let's see what happens. Okay, and actually we are tagged into the trade right now. As you can see, it mitigated the 50% of this demand zone, and we are tagged into the trade. So price collected all of the liquidity from this region. So as you can see, this region between the demand zone and between this high was just a liquidity built up just for the demand zone. So all of these bottoms, all of these trend lines, all of everything in this area was a liquidity for this demand zone. As you can see, price swept all of the liquidity, and after the demand tap, it reversed immediately, had a huge recovery, had a huge rejection, as you can see. The price has still got a liquidity trend line in this region, liquidity trend line in this region, double taps here, double taps here, more taps here, more taps here. So all of this region is just a liquidity again. This is just a liquidity, this is just a liquidity, this is liquidity built up for this supply zone. And we can expect the tap of this supply zone. And after the tap of this supply zone, we can expect a reaction on this zone and a change of character. And after a change of character, we can hop in a short trade and continue the main trend movement, because price needs to collect more orders from this region, mitigate the full zone, the full supply zone, and after it can continue the whole bearish movement. Okay. So as you can see right now, we are tagged into the trade. We have to manage our trade. The last high point here has been broken. As you can see, this was the last supply zone, last high point that tapped us into the trade, and this high has been broken. So we can set our stop loss into break even. So our stop loss is in break even right now, and we just mark it with a red line again. So let's play price forward. Actually, price built up liquidity here, as you can see. So I will just keep my stop loss in break even, because this is a liquidity and I don't want to become part of the liquidity. So let's just play price forward. As you can see, it's building up liquidity trend line actually, because here's liquidity trend line. As you can see, here's double bottoms or triple bottoms. So this is just a liquidity. We can expect a sweep of this liquidity and maybe reversal on this demand zone that created this push to the upside. So actually we can hop in a continuation trade here if you'd like to. So I can just mark out this demand zone. This is a really huge zone, but we can hop in a trade on the 50% of this zone. I will just use my gam box here. So here's the gam box. I will just place my position on the 50% of this zone, and maybe the 2 pip stop loss will cover. It will almost cover the zone. It barely covers it. So I will just keep it that way. So if you'd like to skip on this trade, you can actually do that because you are already in a trade from this point, from this demand zone. This is just a continuation trade. This is a scalping trade. I'm just showing you that you can scalp in a trade right here because it's actually perfect. Price created inefficient move to the upside, huge recovery after the demand tap, built up liquidity here, built up liquidity here, continuously breaking structure to the upside with inefficient pushes. So price has a great chance to sweep this liquidity trend line, sweep these double bottoms, triple bottoms, sweep this line. And actually the start of the whole order flow was this demand zone right here. So if you'd like to, you can enter in a long trade here, a scaling trade, a continuation trade, because as you can see, price actually broke this high too. This was a really valuable supply zone here because it created inefficient push to the downside, swept this liquidity, broke structure to the downside, and price actually broke through this high point and swept liquidity from here. So yeah, it has a great chance to sweep this liquidity and sweep this liquidity also and tap into this zone. So if you'd like to, you can enter in a trade right here and you can target the same zone just on the first trade. And this zone will be 1 to 13. This is 1 to 14. So it's 2 to 27 risk reward ratio if it tags us in. But it can also sweep you out of this trade and you can become part of the liquidity. So you have to risk it. You have to decide if you want to risk it or you have to decide if you don't want to risk it. It depends on you. This is a nice trade because it has liquidity line, as I said, broke through the supply zone, swept liquidity, inefficiency, everything. So let's see how it goes. Actually, price swept the liquidity, as you can see. Created more liquidity here. Created the third bottom. Let's play price forward, reacting on the supply zone. Okay, almost tagged us in. And right now we are tagged into the trade, as you can see. So, and did a huge recovery, huge rejection, as you can see. So right now we are in the trade. Let's see how it goes. It's creating breakout structures to the upside, as you can see, huge breakout structures to the upside with inefficient movements. So after this high breaks, I will set my stop loss into break even, because this was the last high that pushed us, tagged us into the trade, and price broke through this last high point. So I will set my stop loss into break even. So the first stop loss in break even, the second stop loss in break even. So both of our trades are running without a risk. So if it hits break even, we will take no loss, we will take no win. So no profit, no loss on this trade, also no profit, no loss. So we have 2 break even trades running. Let's see what happens next. Actually, I can play price forward. Okay, so let's just play price forward. As you can see, it's breaking structure to the upside. I will keep my stop loss in break even because this could be liquidity for this zone. So I'm keeping my stop loss into break even. If this high breaks, I will move my stop loss. Let's see what happens. Price is creating more upside movement, more breakout structures. And as you can see, price broke structure to the upside. And this broke structure to the upside happened from this candle. As you can see, this was a weak high because it couldn't break below this strong low. This was a strong low point because it changed character here, here, here. So this is a strong low point on the 1 minute structure. And this is a weak high point because it couldn't break below this strong low. And this weak high has been broken and the break has been happened from this candle. So I will set my stop losses just under this low. Okay, so both of our stop losses have been placed here. Maybe it's locked in 10% profit. Let's see what happens next. Price creates more breakout structures to the upside. As you can see, building up liquidity actually. As you can see, this is liquidity. This could be liquidity for this zone. So I'm keeping my stop loss just below this low point. Let's see what happens next. Price is building up more liquidity, as you can see. So here's liquidity on the upside, here's liquidity on the downside, double taps on the upside, liquidity trend line on the downside. I still keep my stop loss. Let's see what happens next. More liquidity, and TP hit. Okay, so that's all. Both of our trades, both of our positions did hit TP. So the first one was 1 to 14, yes. The second is 1 to 13. So overall, we booked 2 to 27 risk reward ratio in just an hour. So we booked 27% in just an hour. This is the power of the scalings. That's actually, if you didn't want to enter on the second trade, you just booked 1 to 14 risk reward ratio and 14%, which is still perfectly fine. 14% in just an hour is incredible, right? We can all agree on this one. So, okay, this was the third example. Thank you for watching.